Welcome back to the channel, everyone. Today I want to talk about TD Ameritrade literally confirming that the AMC squeeze is starting. I also want to talk about another large fund that's about to be liquidated. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Batman Stonks tweeted saying TD Ameritrade the 2nd of November 2021. AMC has been set to 100% margin requirement to short and more requirements on options the day of expiry. GameStop is also set to 100% margin requirement to short, more requirements on options the day of expiry, and short selling of the stock is not allowed at this time. What this is basically meaning is that you can't short AMC or GameStop with leverage, and actually with GameStop specifically, you're not even allowed to short the stock at all. This is obviously to limit TD Ameritrade's risk and to make sure that the DTCC don't issue them some giant margin capital requirement that they can't meet that ends up bankrupting TD Ameritrade. And well, you might say, well, Tom, this is just a tweet from Stonks Batman, so what's the source? Well, if you go to TD Ameritrade's website, you can see a new article, Securities with Increased Margin Requirements and Trading Strategy Limits. This list is of November 2nd, 2021. The following securities have additional requirements in place, and we will not be extending margin credit on some trading strategies. This is part of our normal course of business in situations of unusual volatility. You may continue to place buy and sell stock orders. Now, the last time TD Ameritrade implemented these kinds of restrictions was back in May and June when AMC and GameStop ran up, and also previously back in January when they turned off the buy button. So for CAR and DWAC, short selling is not allowed. For AMC, they may also implement additional requirements on opening trades on options that expire, and for GameStop, short selling of the stock is also not allowed. But I think this paragraph here is really important and why you shouldn't be using TD Ameritrade and you should be using a platform like Fidelity or Moomoo, for example. Please keep in mind that additional security and strategy requirements can be added and may change at any time without notice due to volatility or other market conditions. Therefore, TD Ameritrade may ask you to stamp up additional security, or they may turn off the buy button at any time without notice. As I said, the last time TD Ameritrade did this was back in May, just before AMC and GameStop ran up and went absolutely mental. Obviously, the reason why they're implementing these changes is because of the unusual volatility that's happening and is about to occur. Also, guys, I wanted to thank you massively. You've been loving the content recently, and a lot of you have already signed up to Moomoo. Because of this, Moomoo have given me a special opportunity, and I'm one of only 4 YouTubers that have got this opportunity, all thanks to you guys. Moomoo's new massive promotion gives you 3 free stocks when you sign up and deposit at least $100. If you deposit at least $100, you get a free stock worth up to $350 and also a free share of NEO with a value of approximately $40, which is exclusive to my audience. And if you deposit $2,000, you also get a free share of General Motors with a value of $55. And you could always sell those shares and get 3 entirely free shares of AMC just for signing up to NEO and depositing at least $100, and if not, the full $2,000. And now I also wanted to talk about some recent tweets from Domo Capital Management. They tweeted saying which fund is getting blown up this time. They also tweeted a link to Whale Wisdom and said surely no fund would possibly be stupid enough to repeat Melvin Capital and both use put options as well as short an ungodly amount of shares, which doesn't require disclosure, in the exact same companies. Surely. So let's check out that link to Whale Wisdom and see what it shows. It links you to a page for Anchorage Capital Group LLC and shows that their largest position is AMC put options with a market value of $226 million US, which is 17.7% of their entire portfolio. Now, on top of this, they've also got S&P 500 put options as well, which is another 16.7% of their portfolio with a market value of $214 million. Obviously, both of these trades are going against them very badly at the moment as the S&P 500 is consistently setting new highs and AMC is just about to explode into the stratosphere. So that's about a third of their entire portfolio that's about to be wiped out, especially if Anchorage Capital Management are using leverage and borrowing money from other institutions. They could be seeing a margin call very, very, very soon. As an example, if Anchorage Capital Management are using about a 5.6 times leverage, that means that of their entire 100% portfolio, only 17.7% of that is their own money. And therefore, if AMC doubles, their entire portfolio will be liquidated and they'll be forced to cover all of their shorts, all of their put options, and sell off all of their other stocks down here as well. Now, if Anchorage Capital are 11 times leverage, that means that AMC only needs to increase by about 50% before their entire portfolio gets liquidated. Now, you might say, well, 5 times leverage, 11 times leverage, that all sounds quite large. But let's also remember that Citadel operate with an average leverage of around 8 times their position. And therefore, to think that another institution could be leveraged 11 times actually doesn't seem too unrealistic. Somebody else made a post on Reddit saying, okay, is it really happening? Somebody please explain this explosion to me right now. Now, I think there's a lot of reasons why AMC ran yesterday and in the aftermarket hours yesterday as well, and is doing well in the pre-market today. And I think a lot of that does boil down to algorithms just being algorithms and doing algorithmic things. Now, we are on track to finish the second cycle and start the third cycle for AMC. The start of this third cycle will be shown by a big run up in price. Therefore, we could just be on track to start the third cycle, and that's what was causing the price to explode in the aftermarket hours. The poster also said GameStop is also running with big green candles. Not saying this is the mother of all short squeezes, obviously, because shorts haven't covered, but we've not had such a 7% jump after hours for this pair in a long time. He also said BBBY, or Bed Bath & Beyond, announced a new partnership and share buyback, and it jumped 80% so far. This jump in BBBY is obviously causing some kind of impacts on AMC and GameStop as well. And that just proves how fragile and how screwed the hedgies really are. Now, I also wanted to touch on the AMC chart and show that we're not out of the woods just yet. Yes, AMC has had a few green days in a row, and the MACD is about to flip positive and flip back into the green here as well. But we are still in this rising triangle or this rising wedge pattern, and the spring that I spoke about in one of my previous videos is still winding up. We haven't yet broken out of this pattern, suggesting that the spring is yet exploding. AMC has some levels of resistance to cross here at around $44 and also here at around $45, $46 to break out of this rising triangle pattern. We've also then got more resistance at around $52 and obviously the big levels of resistance at $60 and $70 before making new all-time highs. And therefore the squeeze definitely hasn't started yet and we aren't out of the woods so far. This could all be a ploy by the hedgies and they could be trying to get us to do exactly what they want. Increase the price after hours, get people hyped up, have dumb people buy call options, and it turns out to be a bait by the hedgies. So if you are getting excited and you do want to FOMO buy some more AMC, be sure to buy some actual AMC stock and not AMC call options, as this could all just be a bait. When the market opens tomorrow, buy through lit exchanges or route through the IEX. Fidelity offers it for free using their app in beta or beta mode. Because obviously if you end up buying call options, you run the risk that it could be a bait and they might just expire out of the money and you've lost all of your money and it's just more money and more liquidity for the hedgies. But at least if you buy some AMC shares, they don't expire, and especially if you buy them through lit exchanges, it means the trades actually get routed direct to the lit exchanges and they don't go through the dark pools. And now I also wanted to touch on some wider market updates, and it also looks like the housing market isn't doing too well. Zillow to stop flipping homes for good, as it stands to lose more than $550 million, and they're going to lay off a quarter of their staff. Zillow said, "We've determined that unpredictability in forecasting home prices far exceeds what we anticipated, and continuing to scale Zillow offers would result in too much earnings and balance sheet volatility." Zillow Group is calling it quits on a home flipping business, while disclosing losses of more than $550 million on homes purchased in the second half of this year, for which the company admits it paid too much. The real estate giant on Tuesday blamed a faulty algorithmic model for ditching its iBuying business of buying and selling homes quickly, and said it will lay off about a quarter of its staff. The surprising exit, announced with pedestrian quarterly profits, thrashed shares in another rough trading session on Tuesday, a day after an analyst said 2/3 of the homes it bought are underwater. Zillow disclosed that it wrote down $304 million in losses due to houses purchased for too high a price in the third quarter, and expects losses of $240 million to $265 million in the fourth quarter for the same reason. pushing total losses on those houses to more than $550 million. During the third quarter, Zillow said that it bought 9,680 homes and sold only 3,032 of them. So it looks like not only is Zillow selling houses for less than they're purchasing them for, but it looks like they can't even sell most of them. I think Zillow is realising that the housing market is not what it was over the last few months or over the last year, and housing prices are not increasing quite as fast, and therefore Zillow obviously sees something going wrong with the housing market in the future, and they want to get out as quick as they can. Squawkbox also tweeted saying the futures market is pricing in a rate hike as much as 6 months earlier than previously expected. And Rizzo said the Fed is likely to announce a pullback from their $120 billion monthly quantitative easing of securities and mortgage-backed securities and hike interest rates. Here comes 2008 on steroids, as runaway inflation is already hurting household purchasing power. Obviously, inflation is running so fast and so high at the moment because of this low interest rate environment and because of the sheer amount of quantitative easing that the Fed is doing. And therefore, obviously the Fed need to stop the quantitative easing and need to rise interest rates in order to level out and reduce that inflation. But the problem being is that the economy is not fully recovered from the pandemic and is not feeling confident enough to start investing without low interest rates and without quantitative easing. This is ultimately why stocks and securities and also the housing market has ran so much over the last year. Pulling back from their quantitative easing and hiking interest rates is likely going to slow the growth in stocks and also in the property market, and could obviously potentially cause a crash. And Rizzo obviously thinks that this crash is going to be like 2008, but on steroids. Guys, before I leave you today, I did want to let you all know and reassure you that when AMC does start squeezing, I'll be sure to live stream all day to help reassure you and calm you down and help you keep those diamond hands strong. Guys, be sure to let me know down in the comments below what you think about TD Ameritrade increasing their margin requirements that they haven't done since back in May and back in January. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers. And if you haven't already, be sure to sign up to Moomoo to get those 3 free stocks, because at the end of the day, everybody loves free money.